Welcome to lesson 5. Today we are going to learn about final accounts in a very simple way. So let's get started. Final accounts are financial report prepared at the end of the trading period. They show whether a business made profits or loss and also reveal the financial position of the business. There are three main types of financial accounting: the trading account, the profit and loss account, and the balance sheet. The trading account. The trading account is used to calculate gross profits. It compares sales with the cost of goods sold. When sales is higher than cost of goods sold, the business makes gross profits. Next is the profit and loss account. The profit and loss account is used to calculate net profits. It takes the gross profit and subtract all expenses like transportation, rent, and salary. What remains is the net profit. The balance sheet. The balance sheet shows the financial position of the business. It tells us what the business owns, which are assets, and what the business owes, which are liabilities. It also shows the capital of the business. Now, let's look at a simple example here. If sales is 50,000 naira and cost of goods sold is 30,000 naira, the gross profit will be 20,000 naira. If expenses is 5,000 naira, the net profit becomes 15,000 naira. That's 15,000. Now, to summarize, the trading account gives us gross profit, while the profit and loss account gives us net profit, and the balance sheet shows the financial position of the business. That is a simple way to explain final account. Thanks for watching. Subscribe.